Hello friends, how many of you want to know about 2019 budget, its highlights and its impact? Today we have author, trader, trainer, Professor C.A. Rudraology sir. Along with them we have Jagdish. He's the CFO of Vachana Investments Private Limited, and along with them we have our co-host Shreya. So let us start directly with the budget, what it has impacts on the markets. So my first question to you sir. So how much do you rate for this budget on the scale of 1 to 10?
See, depends. If this is a budget looking from a common man's viewpoint, I might say I might rate just 5. But if I see from a business viewpoint, specifically from sectors like banking, might be I might rate even an 8 on a 10 scale. So might be if I have to look from overall corporate viewpoint, I might just again rate very high 8. So it all depends from whose viewpoint. But overall, I might definitely rate this budget 7 out of 10.
7 out of 10. Okay, Jagdish, I just want to know your thought on this.
So actually, I would like to rate this budget 8 out of 10 because the reasons are see, for any economy to grow, there are certain key factors and industries which has to be specifically focused on. If you just come across the budget or the things which Nirmala Sitharaman has discussed, she has put a very key focus on certain key industries like if you see infrastructure and banking. So recapitulation of PSU banks up to 70,000 crores and infrastructure spending almost, they have planned for almost 100 lakh crores for the next 5 years. So we have, the government has a very clear intent towards taking this economy from $2.5 trillion to the $5 trillion. So for this to happen, there are a lot of key factors which has to be put on the industry's point of view. So I think those key points have been covered in this budget, I feel like. So I would rate 8 out of 10.
Okay, fine. So I just carry forward from that answer. Which sectors do you feel will have huge impacts going forward for next 15 months to 24 months down the line?
See, if I see the whole budget focus specifically was more onto financials. I can see even banking, the stocks already started doing very well. In fact, the dichotomy what we had was, today Bank Nifty was up close to 1%, where Nifty was down for another percent. So we had two indexes moving exactly on opposite direction. So for me, banking, financials, good NBFCs, even housing finance company and infrastructure which Jagdish was mentioning. So these are broad sectors which might do very well, but one has to understand any stock performance. I always say stock prices are slaves of earnings. You have to have a clear understanding of what that particular company is doing. The future visibility of earning is very, very important, and at what valuations are you getting those stocks today. So if someone can understand these simple techniques of value investing and buy good companies at reasonable price and hold it with patience for good time, you are definitely there to make big money.
Okay.
Yeah. So actually, this is a very quite interesting question for me. The thing is, I would like to mention a couple of points here with respect to the industries which you are focusing in terms of stock market and capital markets. So I would mention, as I was speaking in terms of economic growth, one has to focus on infrastructure. So I would feel like infrastructure stocks in the industries which are related to the cement, so would be feeling better. And I would feel like this is one more industry which is going to emerge into our markets, it is called electric vehicles. So the companies which are being engaged into this sort of industries would have a greater impact, because if you see the budget, so Nirmala Sitharaman has specifically mentioned in terms of IT deduction for the people who have bought or purchased electric vehicles up to 1.5 lakhs. Means you understand the intent of the government saying that to push the entire industry towards a growth path. So I would feel like this is one of the industry which is going to emerge. So one can have a keen focus and do a little research in terms of this, so which should have a greater impact in terms of wealth creation.
Rudraology, I have a question. If you see the last year's data on small and mid-cap funds, we see that they've actually not done well. They're around 50 to 80 points down. But Nifty has reached its all-time high. So what are your views on that?
See, specifically onto budget, first if I have to focus on mid and small cap, one data which definitely did not impress me, they said public holdings from 25%, which is there currently, has to rise to 35%. That means earlier promoters could have maximum 75% holding with public holding 25%. Now Sitharaman says we want 35% of public holding minimum. That means promoter cannot hold more than 65%. So if this happens, a data tells to me close to 167 companies are there listed in exchange where promoter holdings currently is already there at that levels of 75, and if it has to reduce to 65 and this money has to come from public, the number calculation which I did, it says close to 3,67,000 crore money is required. Now 3,67,000 crore money has to come from public to stock market, or promoter will start diluting his stake. So this is definitely not so good for mid and small cap generally, or specifically in those areas where promoters are currently holding 75% and they have to reduce to 65%. If I take only this particular portion, close to 3,67,000 crore money has to come. So if I take the overall budget view on a mid and small cap, or for that matter cases where promoter holdings currently has to reduce and public holding has to rise from 25 to 35, it's not a good budget for me for a mid and small cap. But current valuations are very, very cheap. You have to buy quality. I always tell people, repeatedly I have been tweeting also and telling people that never ever buy just because you get Yes Bank today at a lower price, and Yes Bank even today you are now getting below 90 rupees. It has come to double digit. Look at what happened in DHFL. NBFC as a sector, you have to pick the right stock. Look at stock like Bajaj Finance. People ask, what is the next Bajaj Finance? I said it is Bajaj Finance. Again people ask, tell me top 3 stocks in NBFC. It is Bajaj Finance, Bajaj Finance, Bajaj Finance. So people have to understand, pick up quality. I know quality comes at a price, but again then I have visibility of earnings. A company which is growing at a rate of 35 to 45%, and I can see next 3 to 5 years this visible and clear growth. I don't mind paying bit higher valuation. Don't buy scrap, don't buy DHFL, don't buy Yes Bank, don't buy Reliance Capital, don't buy Reliance Infra, don't buy Suzlon, Unitech, and I can keep naming like these stocks. So what people do is, they think that once upon a time that stock was available at 200 rupee, today the stock is available at 20 rupees, so let me buy. But from 20, can it not come to 2 rupees? And the company when it was at 200 was different. Now at 20 rupees it is different. So don't go by price, go by company, how it is performing and what is the expectation in future. So to put the whole story short, I feel year 2019 second half and year 2020 will be a year for good quality mid and small cap stocks. They will do fantastic, but only thing is, can you pick the right stocks there and sit tight with tons of patience. And also let me give a disclaimer from Vachana Investment, both me and my CFO Jagdish who is here, don't take any stock as a recommendation, do consult your financial consultant or the person who is advising you on your investment, but I'm only trying to make a very clear point, don't buy stocks based on price fall of 90%, 95%. Buy quality companies from mid and small cap, they will do fantastic in coming days.
Okay, so
So actually, from this point of view, I would like to add one more point. Like, say, from the last 6 months, to 1 year, if you see a lot of mid caps and small caps, a lot of companies almost have wiped off 80 to 90% capital. So only in Nifty, so only certain stocks like 5 to 6 of driving the Nifty. So when I talked about this point, I would feel like for the next coming 5 years, one has to be very focused on identifying companies, because, for example, if government is very keen on spending in terms of infrastructure or any sort of industry which is going to be benefited, so one has to analyze the companies who are into mid caps or small caps, whether they have capability to absorb whatever the government is going to spend. For example, if I take an example of L&T, so that company, so if government is going to spend into infrastructure, that company is having a capability in terms of all respects to absorb the entire opportunity which is given by the government. So I would feel like one has to be very cautious in identifying stocks or companies in terms of whether they have the opportunity, we have an opportunity, whether they have capability to absorb that or not. So I would feel like, so one has to do due diligence when identifying mid caps and small cap stocks.
And one point very important that Jagdish mentioned now, when it comes to infra specifically, the sector which can do very good, you have to understand these are times when I have to buy stocks from infra where I don't have corporate governance issue, where I have quality of management, and I have to also ensure the debt component is very low and they are low leveraged companies. In environments when market is doing fantastic, then we don't mind, okay, we can even take a high leveraged company. So today people have to understand, don't go to infra and buy any stocks. I can name some of these stocks where their debt and interest burden is far greater than even their sales. So don't buy these type of stocks. And few people think if I buy a stock with PE multiple of less than 5 times or 10 times, that's a great stock. Why should I even pay a 10 PE multiple to a stock which doesn't have future visibility of earnings? So buy quality which might come bit at a higher price, but then that is where you have to do your research and do understand it is my future earning expectation and the future performance of company based on which I will pick up a stock today. I will not look at past performance and pick up a stock today. People have to understand this. It's not like buy any stock. It is in mid and small cap. You have to be very choosy. Buy stocks with good quality management. First most important point, ensure their leverage levels or debt levels are less. Ensure no corporate governance and there is clarity in this company. Ensure they have a good return on equity and return on capital employed. So these are all basic things what one has to do before selecting good stocks.
So Rudramurthy, what would you like to tell the investors and traders post this budget? Whether we should hold on to our stock, whether we should buy more and accumulate, or whether we should sell and just make profit for now? What are your views now post the budget?
Okay, see, if at this minute if I have to take a call, especially for investors, I will put my neck out and say buy good mid and small caps. If I have to generalize, 2019 second half and 2020, this entire 1.5 years period will be a good period to pick up great stocks. In 2017, the opportunity what I had in picking up stocks was very limited, whereas what I get today in mid and small cap in 2019 second half or even 2020, so I feel there is a big plethora of list of stocks which I can pick. And Jagdish even mentioned about cement as a sector. Definitely there are great stocks available in cement, but only because people have to ensure it should be more the individual specific stock. It should be more a bottom-up approach where you know the specific company, its performance, where you are putting your money out, then look at the sector where it is trading, and finally I'll be looking at the particular macroeconomic factor. So for me, this is the time to buy good stocks, especially from mid and small cap. And if I have to list some of them which I like and which I have been recommending also to our clients, see, for example, 1.5 years, 2 years back, we were buying Raymond available at 400 rupee. Even in this mid cap, small cap crash, Raymond today is still available at 750, 800 rupees. People have doubled their money in stock like Raymond, and people ask, can I get the next Raymond? The next Raymond is Raymond. I'm still saying even at 750 rupee today, Raymond has very good comfort and margin of safety. Similarly, I can keep naming. See, even for example, for me, I'm very bullish on pharma, but you have to be a selective stock picker in pharma. So for example, in pharma, I have holdings in Fridun Pharma. I even have holdings in Vanta Biotech. So these are stocks where, whether it is Fridun or Vanta Bioscience, people have to understand it is in specific stock picking. It is just not taking up a particular sector and painting the same brush and saying like, okay, this entire pharma may not do good. Many people are saying pharma has not performed, but look at this Fridun Pharma or look at this Vanta Bioscience, they have performed fantastic. Look at even stock like Medicam and Bio, and all these are stocks which you have to select specifically and then buy. For me, even paper can do very fine as a specific sector. For example, I am just liking the JK paper. This can do fantastic. And look at the company valuation, everything is very attractive, and these are stocks where people can bet their money. And I can keep naming, I can give a big list of stocks here, but you have to be choosy. Have the right person who can also tell you not just the stock idea. What is very important, you should know when to exit your stock. In fact, it is only 10% of your entire discussion is only on the stock picking. The rest 90% is on knowing the right exit and also knowing the right allocation. If someone has allocated all his money on DHFL and Yes Bank in his portfolio, and I have just allocated 1% of my portfolio in DHFL and Yes Bank, and if my portfolio was all with Raymond and Bajaj Finance, I will make killing money. And if another person had Bajaj Finance and Raymond, but he had only 1% of his portfolio in these two great stocks, and every money was locked up in DHFL's, Yes Banks, and you are all unwanted stocks, then you will lose all out. So please understand, along with stock idea what you have to take, you have to see even the allocation what you make on that particular stock to your overall portfolio, and also along with that you have to even ensure you know the right exit. So if you don't follow this, this is where a good financial advisor, a good portfolio manager, a good fund manager in a mutual fund can make a big difference.
Okay, so before going to the next question, I just want to know like the fiscal deficit they have added this year. Do you think that number will be is fudged out? Do you think next 1 year down the line they have told 2021 they will make it to 3%? What's your view on that, sir? Because market was looking for fiscal deficit and that not much emphasis was given on that. What's your take, sir?
In fact, fiscal deficit number, what they were estimating and what was looking up was 3.4% of GDP. But surprisingly, Nirmala Sitharaman never spoke about it except for the last minute when budget was about to close. But the shock was from 3.4% it was 3.3%. That means people were wondering, will this number 3.4 go to 3.7 and that will be negative to market and all. But what actually came was something like 3.3%. And also government is very clear. They want to extend the tax base. They also want to focus on growth. And if you see the entire budget, they again taxed this cess of 1 rupee for diesel and petrol, gold 12.5% from 10% import duty, and even if you see all these stuffs are adding value. I have to say super rich have been made a bit poor by taxing more. So if people have today an income level of more than 5 crore, they end up paying 7% additional effective tax. And if your income is between 2 to 5 crore, then you pay up additional 3%. Now what's happening? Super rich are made a bit poor, but that is good. So government has to collect money to spend. If money is not collected, how will government spend on infrastructure or on anything for that matter? So what I can understand from this budget, overall budget, so government has done a very good balancing act. I can see clear visibility of growth, and growth is the only solution to too many problems what we have. The encouragement what has been given to startup India, the encouragement given to new entrepreneurs, that has been amazing for me. So this creates employment opportunity. I feel Modi and Nirmala Sitharaman has now given a primary focus to employment creation also. And let me not forget, he thanked the entire taxpayers, and they also have to understand that it is only because of these super rich or people who are paying honest tax, our country is growing. I am so proud, and even if I pay a bit more tax, if that is contributing to our nation and if that helps even poor people, I don't mind doing that. So this is something which was very special to me from the budget.
Okay, so then what is your recommendation, advice to the budding businesses or freshers? Like, what is your take?
Okay, so for all freshers, my first advice to you is, please don't start directly with trading unless you have learned the art of trading. And trading is not just having one system and then you get a buy call or a sell call, you get a crossover or you get some breakout. So that is not trading. Please understand, with 17 years of experience in trading, using techniques of market profile, seeing all the basic technicals, candlestick patterns, Ikimoku charts, point and figure chart, order flow analysis. So with all this, what do I conclude? Trading requires a lot of discipline. If someone has proper risk management with him, and someone who understands sentiments of market very well, someone who does a lot of homework, takes responsibility, prepares good trade plan and then trades. With this science if he trades, with the knowledge if he trades, there is money to make. Or else a new person, please just invest in some quality good stocks. Buy stocks even from large cap. For me, I see a lot of value in stocks like even Reliance Industry, HDFC Bank, Kotak Bank. So pick up these type of stocks. SBI for me is a must in most of the portfolio. And if you want to buy stocks from PSU, buy something like SBI. Why do you want to go and buy some scrap which is down already 60-70%? I don't want to pick UCO Bank. So I don't want to pick Dena Bank. So people have to understand you have to buy quality. So in PSU for me, for example, SBI, or even if you want to go a bit deeper, I might go for even Bank of Baroda. So these are quality. So if you want to bet on PSU, do with this. Private banks, yes, I see HDFC Bank, I see Kotak Bank, and Reliance Industry, a must stock. Even for me, telecom can do well, but I will only bet on one stock if I have to pick up telecom as a sector. Bharti Airtel can do very good. Valuations are very attractive for me. So this is how you have to pick stocks. A fresher should not go and start buying stocks like Unitech and Suzlon because he gets more quantity. A person came to me and said, sir, I have 1 lakh rupee with me. I am a fresher and Unitech trading somewhere at 1 rupee. I get 1 lakh quantity. You are buying 1 lakh quantity of shit. I don't want you to buy 1 lakh quantity of shit. These are stocks not worth buying. For me, even if you have 1 lakh, buy 2 stocks of MRF. Understand it is not having how much quantity which is more important, the returns what you make. So as an investor it's a different ball game, as a trader it's a different ball game. You have to play the game with lot of learning, and only if you learn then the earning comes. I only say there is only one strong reason why people don't make money in market, both in trading and investing. They want to become rich tomorrow morning. Oh, I'm sorry, they want to become rich immediately, not even tomorrow morning. That's a too late time for them. So if people can understand richness comes over a period of time, and you have to build your wealth over a period of time, and you also understand the science behind trading and psychology, and have this attitude of never give up, and then you understand how markets move and the sentiment, then you can become a good trader, and it takes time. And more than anything, you can't become rich easily also. So two reasons why people don't become rich: because they want to become rich fast, they don't want to give time, and second reason, they want to become rich without putting any effort. So if you put effort, then the money comes. So if you can follow these basic things, whether you are a new or an experienced person, lot of money is there to make.
Okay, sir. Okay. So, Jagdish, you have anything
Yeah. So actually,
to add on few more things?
Yeah, I want to put few more things like, I would feel like in this budget, if you could see, the first point what everyone has mentioned is like, in terms of economy, is growing from $2.5 trillion to $5 trillion. It means, so the India has taken almost 70 years, long years for creating this $2.5 trillion market, right? For it to create other $2.5 trillion, it's only taking just 5 years. So it would be a greatest opportunity for any investor to identify great businesses and capture this entire opportunity, because you're getting the entire opportunity in the next 5 years. So I would be feeling like this is the right opportunity for any investor to identify great businesses and invest and hold it for long. So I would also add few more points like, so one should not focus on buying a cheap stocks. So I would feel like in terms of the PE ratios, like as Sir also mentioned, like in terms of 1 or 2 PE ratios, one should not focus that we are getting it at cheap stocks. So one has to identify that the future earnings visibility has to be sustainable. So I would take a point from a great investor saying that when he would sell stocks, I would say like he would be selling a stock because when the future's earnings EPS is peaking, what it means like in any business cycle, so the business growth or earnings goes in a cyclical cycle. So it starts with growth phase, so it reaches to a maturity and it declines. So if earnings of any company is reaching to a maturity stage, that there would be a selling stocks. So you have to identify that in which cycle the business is into. So the next point is, I want to put more stress on this point, is like in terms of corporate governance issues. See, earlier if you would have seen that, this is the first point which the entire market era has been changed, or in terms of the exchange or SEBI has been very strict about it. So example, if you take 2008 cases, I'm not naming any companies, there are certain companies have vanished from 90 to 95% or been bankrupt due to this corporate governance issues. The same has been replicated in 2018, if you could see, that has been started with DHFL or in terms of any other companies, if you name it out, or 3 to 4 companies. So any sort of corporate governance issues, because the market is taking this point as a very sensitive point, because they don't want to make any price for that, even a 1 rupee. So I do not say that, I can say that those stocks even go to a zero level over a long period of time. So I don't recommend any this sort of issues which you find it in company. So I always advise, if you are not able to spend some time in due diligence or researching stocks, I would feel like you approach an advisor or financial advisor, or else you have to pay for your the investment which you have made.
Okay, fine. So I have one last question for you. Nifty is trading at all-time high, Sensex is trading at all-time high, and all the global markets are at peak. Where do you see, sir, by December or next financial budget? Where do you see, because Nifty, they say like, I just saw your same program a few days back, where you told Nifty has been going up with 10 or 15 stocks. So what is your view, people who are looking into the year end or next budget?
Okay, if I have to give my specific view on index for a time period of, let us say, next 6 months, next 1 year, see, Nifty might go and touch 12,500, 13,000, I don't know. But end of the day, people have to understand market has been so volatile. If you don't just catch the right bottom or the top or closest to the bottom and top, making money has been very tough in volatile market. In fact, I would advise people to understand trading volatile market requires a different skill set. So if I have to answer straight your question and putting my neck out, I feel currently this support of 11,600 or around 11,650 on Nifty futures is very strong, and on Bank Nifty, if I have to again put that number, somewhere close to 31,000, 31,200 levels, very strong supports are available. If we break these supports, then only we might see some correction, but I feel stock specific movement, mid and small caps will perform very well in next 1.5 years. And also let me make a disclosure, people should not feel, when I spoke about Unitech, Reliance Capital, Reliance Infra, DHFL, Yes Bank, that I hate these stocks, but one has to understand, I'm not hating them today. Even when DHFL or even when your Yes Bank, before results in fact, it went to levels closer to, if I am not wrong, 280 rupees. And people told, when Yes Bank went to 280, and when I was telling sell at every level, people told when they saw it from 170, 180 going to 280, oh, this has become the next HDFC Bank. But again from 280 today you are seeing the stock at 90 rupee. I told it will soon touch double digit. Same with DHFL. I want to also tell you, same with Jet Airways. I can keep naming. So what I tell people is, be very stock specific, have your investments, have patience. You know, one more big problem people do, they buy some stock, good stock, and every 3 months they keep testing it and they say, oh, my stock has not given me return. I know some investors telling, I bought a stock 1 year back, it is down 20%. If you can't hold a stock, first of all, you are not an investor. And if you are not an investor, the best thing you have to do is, if you don't have that 3-year, 5-year kind of a time frame, don't do investing, do short-term trading, have risk management, learn the trading art and then do. People have to focus on the time period also and then do. And I have a very clear disclosure once again, any stock which might have been on the negative or on the positive side, whatever I have spoken, so those are my views as of now. People have to consult their financial consultants and then take a call, and I don't know what might happen for those stocks tomorrow. So these are my views today. So will I change my view tomorrow? Yes. So that's the reason I told, getting an idea is only 10%. The rest 90% is in holding that good idea, knowing when to exit, and also knowing what portfolio allocation you have to give. So if you can manage these things, then only money is available in market. Or better than buying these stocks like DHFL's, Yes Bank and all, you can do some charity so that people at least remember you when you help them with money, right? So if you donate it to some schools, some old age homes and all, you at least get some punya, I say. But if you buy these stocks like Yes Banks, DHFLs, Reliance Capitals and your Unitex, you don't even get that punya. So don't lose money into these stocks, get right advice, learn market, and then there is a lot of money to make. Today we have only 4% of Indian population in stock market, whereas in advanced countries, the number is 40 to 50%. I don't want this 4% to go to 40% or 50%. Even if this 4 goes to 10%, and as Jagdish was saying, in fact he said 2.5 trillion economy to 5 trillion in next 5 years, but we have to understand, before Modi took over, the number was another 1 trillion below. So just in last 5 years we have added 1 trillion in Modi's regime, and we are expecting to again add another 2.5 trillion close to in next 5 years, and the roadmap is so clear. So 5 years down the line, India might be between the 3 to 5 largest economy in the world. So where we stand. So people have to understand the big opportunity, because you are investing in gold, you are investing in bank deposit, you know what's happening. And if you by chance put your money in chit funds, give money to few other people and then lose all that money, take first capital safety, then look at return. Buffett says there is only 2 rules to follow in investing. Rule 1, don't lose your hard-earned money. Rule 2, don't forget rule 1. So have capital safety as first prominent point, give enough time, know your liquidity levels, know your time period, and have a right advisor so that you know not just the entry but also exit, and plan your finances very well. And to become rich, always put in effort, and along with it give time. With all this, I am sure you will become rich and successful.
Okay. Thank you so much, Rudraology and Jagdish. We really appreciate, and I am sure a lot of investors and traders are going to they're going to make their finances properly and well. Thank you so much.
Yeah, it's a privilege, and thanks for my host. So let me also just thank them on behalf of Jagdish, my CFO, and also MD Sagar, and then also Shreya, who has done this wonderful job. Thanks for all our viewers also are there here. And you want more information about us? Yes, Vachana Investments, www.vachanainvestments.com, and let us continue the big learning so as to make the big earning also. Thanks for watching. Bye-bye.